So we are back with Robert Fragoso. In our last video, we walked properties to see if it was a good deal to flip. If you don't know who he is, he became a millionaire at the age of 19. He's been an investor for over 30 years. Robert and his business partners also built one of the largest hard money lending companies in the country. Robert, how you doing?
Hey, I'm doing great. Thanks for having me.
I'm pretty new to this business. I don't really know anything about hard money lending. I only know a little bit. So can you explain in your own words what hard money lending is?
So hard money used to have the connotation that it was very expensive and kind of the loan shark type scenario. What it really is, it's just taking private investors that are non-institutional, that are not a bank, and you're taking their funds and lending it to other individuals. So it's using private money instead of hard money. The difference is that a bank might require tax returns and everything else. A hard money lender is going to look at the value of the property.
And they're going to say, if it's a good deal, then they're going to lend you the money.
There's a saying in the business that, like, don't worry about the money, just find the good deal. If you find the good deal, the money will find you.
So how'd you get into hard money lending?
You know, it's funny, I actually fell into it. I got started at a young age, and when we were starting, what happened was that we were basically wholesaling a lot of houses, but back then nobody knew it was called wholesaling, right? We were giving all of the loans from the people that were buying those houses to another hard money lender. Our deal with him was, listen, just tell us how much down you need to lend whoever it is that we bring you the money. We did that so many times that one time he ended up telling us, like, man, you know, you guys made me like $100,000 last month.
Oh yeah.
And so
once he said that, you're like, huh?
Once he said that, I'm like, oh, we're in the wrong business. I already had a lot of investors because we were syndicating apartment buildings. The market had dried up to buy more. So they were making money with us, and they just asked us, like, what do you want to do next? And we're like, it's hard money lending. You know, they had more money than deals, and I had more deals than money.
What'd you do for the marketing to actually get clients for hard money lending?
So we had sponsored a lot of different events to get our brand known out there. They bring all these people that are real estate professionals, and we were branding ourselves as the lender for fix and flip. So a lot of sponsorships, outreach to people that were already doing flips, right? Very easy to track the people that are flipping. You just skip trace everyone, you call them, we would drive by their projects, get their info, talk to them. And the good thing about doing that is you get to see their actual project while it's in the works.
Yeah.
So our philosophy was that we looked for people that were narrow and deep. We wanted less borrowers that were doing a bigger volume that we could maybe help scale. So we would look at these people and would say, okay, this guy can scale. He'll understand the business, and let's mentor them to do that.
Yeah.
So our business would grow by helping them grow.
Yeah.
And that was really the goal for it.
Where was most of the money coming from? Your business partners were putting up money, you had investors,
right?
And then you also mentioned that you can get lines of credit.
So we had a lot of friends. When we started, it was friends and family money for the most part. My partners at the time were professional poker players. So a lot of our money came from like the poker world.
Oh, just straight up gambling.
Yeah, and so a lot of them were investors, and it's analyzing risk. So it's very much like real estate.
Yeah.
So real estate, you're just really analyzing risk. So it naturally kind of fit with them. We started doing that, and as we grew, we were introduced to different companies that would provide lines of credit. Lots of companies out there that do lines of credits. Wells Fargo, 10 million or 250 million, right? So it just depends on who they're doing.
How do you qualify for that?
You have to have a high net worth, right?
So they check your bank statements.
Well, they want your deposits. That's really what they want.
Talk a little bit more about the interest arbitrage, how you were getting loans from Wells Fargo for 4% and then how you lend out the money for 8%.
Yeah, so what happens is whether it's Wells Fargo or a private investor, that arbitrage generally with private investors might be 1 to 2%. And with the banks, if you have a line of credit, then you're really making more like 4 to 5%, depending on what you're lending it at. With banks, you have to have some of your money in as well, right? They're not like, oh yeah, hey, roll, go for it. And so it's very difficult to get one of those lines. It's not as difficult to get a line where you're arbitraging 1 or 2%. Those are much more readily available.
But there's more risk involved, right?
There's always risk involved with a lot of those if there's a downturn. And the lenders where there is no risk on the downturn, you know, you're not going to make that arbitrage. You're going to make either half a point or maybe a point at most, and then they're going to take the rest of it because they're taking the majority of that risk.
What kind of fees are associated with hard money lending? Let's say I wanted to get a hard money loan for a property I wanted to flip.
Generally speaking, depending on the lender, some require appraisals. I would say that you're going to have whatever the appraisal fee is plus another ranges between $1,500 and $2,500, and just call them junk fees. All of the fees combined, it's going to total that, plus the points, which is the origination fee. So 1 point is equal to 1% of whatever the end loan amount is, right?
Yeah. Talk about how much you make with the points and then how much you make off interest too.
Well, back when I was doing it, the market was probably somewhere between a low of 1.5 and a high of 2.5.
Oh, 2.5.
Right. The interest for hard money, depending on what part of the country you're that might range from as low as 7% to as high as 11 or 12%. If your $775,000 loan amount, and let's say your cost of money was 6%.
Yeah.
And so you were making, and you were selling it at 8%, you've got a 2% spread.
Yeah.
If the loan goes for a full year, that's $15,000 in profit. You look at the points, so if it's 775 times 1.5%, 11,625. That's off the points, which is the origination.
Yeah, the origination.
And then plus the 15,500. So if that loan went for a year, you'd make $27,125 on a $775,000 loan. So they go for, like, the average is probably 6 months. So back off half of that 15,000 is you're making about 20,000, 19,000 to 20,000 on that one loan.
Yeah. Can you elaborate a little more on the foreclosure process?
So if it's a bad deal, here in California, there's a 90-day notice of default and then a 21-day trustee sale period. So technically it has to happen that quickly, right? It's 90 days plus 21. Usually it gets delayed for something or other. Really what the goal would be is to put enough pressure to get the project finished. The goal is not to foreclose, but ultimately what happens is when you're a lender is you have a fiduciary to your investors as well. Once you've funded the loan, your fiduciary shifts to the investors and you've got to protect them and their funds. But this is the importance of, like, working with an actual lender versus a broker, right? Because if you go to the broker,
they don't know anything.
They don't know anything. It's not their money.
So when would you foreclose on somebody?
When they stop returning calls, they're not trying to fix it. They're just letting it sit there and our equity is getting depleted. And you have no choice. You have to foreclose.
How does the equity get depleted? How does that work?
The interest clock continues. If you just let it get to the point where, okay, hey, we're still going to get our principal back, but we're losing some of the interest, that's not a good scenario. That's what I mean by depleting. Or the property's sitting there vacant, city violations, it's getting into disrepair, people start to break in. So that depletes some of the equity as well.
So how long do you usually give somebody?
30, 45 days.
Really?
Yeah, you're sitting there trying to figure that out. If they're not working with you and they're ignoring you, why wait?
Let's say for whatever reason I wanted to start a hard money lending company. Would I need some money myself, or is it possible just to gather a bunch of investors and create the business?
Well, there's all kinds of legal stuff, right? Because now you're fundraising, so there's SEC rules and laws that you need to abide by. It's easier said than done. You have a real estate broker license or an NMLS license, so you can do loans. It's probably much easier for you to broker these loans initially until you get enough of a track record. Then I would recommend starting off, unless you're well capitalized to begin with, starting off brokering some of these relationships. Go to other hard money lenders that are on the wholesale nature that would work with other brokers. That means you can charge your fees and you'll make anywhere from...
Just for bringing in the business, right?
Just for bringing in the business, right?
Yeah, so just kind of being the middleman and connecting people in the beginning. What would be like the next step after starting as a broker? Would I just start putting up my own capital, or would I start finding investors?
You would talk to an attorney about starting a fund. Just because you start a fund doesn't mean people are going to invest in it. Your entire reputation has to be stellar for people to give you their money. You're honest, you're straightforward, you understand the business well. If you're a hard money lender, the words you can never say is safe.
So what does the attorney do? He just writes contracts just with disclaimers saying that you can lose all your money?
He writes a contract that's going to scare the shit out of them. They're going to write out every worst case scenario. People that invest, they understand.
They're taking a risk.
They understand the risk. The difference is, okay, you're going to make 8% versus 0.3% at a bank.
Yeah.
If that. You can't be afraid to take risks if your goal is to build net worth. There's no gain without pain, and the goal is to make more wins than losses, right?
Exactly. When you consult with an attorney, do they handle everything with the SEC, or is there another process on top of that?
You want to hire the securities attorneys that are familiar with everything. Depends on what you're going for. Multiple different types of funds.
Yeah.
And different types of securities and permits that you can get. If I go back into building a fund, I would do exactly what I'm saying right now. It just so happens I haven't had that need. With building this new company where it's more of a debt equity company, then I think that I will get to that point, but I'm just not there yet. I haven't had that need just yet.
What is that, debt equity company?
I'll do hard money loans, right? So I'll lend people money. If they don't have the money and I like the deal, then I'll put up all of the money in exchange for part of the equity as well. So it's a debt and equity.
How much equity would you take if you put up all the money and they find the deal? Is it like a 50-50 split?
Yeah, it might be a 50-50 split. Yeah, it might be, if it's a home run deal, it might be less. If it's a tighter deal, it might be more.
How do you build that credibility for investors to trust you and start working with you?
Showcasing your experience is going to be one of them.
Yeah.
If you're starting off in your brokering and you can show, hey, these loans, they were funded here, paid off here, they were bought for this much.
You build up that track record as a broker.
Of course, sure. Honest, communication, straightforward, good, the bad, the ugly, that's super important. We're doing these loans, right? And most of them we're selling off to other lenders, but we'd like you to be our investor for these loans. And here's the track record of this particular client.
All right, well, I want to thank you for sharing your knowledge with hard money lending. I feel like that was really insightful for people who are just barely getting into the flipping space, or even people that are veterans. If you guys want to reach Robert, you can reach him at his Instagram. Awesome. Is there anything else you want to say?
No, I mean, just reach out if you guys need money. I'm happy to put up the money. Very simple. You can partner with me, you can borrow from me, or you can sell to me. Make it very easy.
That's awesome. All right, well, we're pretty much gonna wrap up this video. I want to thank you again for being on this video, and we'll catch you guys later.